Lawrence McMillan 是著名的期权专家。那么当前有哪些期权策略是你不容错过的呢？对于期权的初学者来说，应该如何选择价内期权和价外期权呢？一起来看一下。
Hi, Mr. McMillan. Thank you for joining us again. You said when there's high volatility, sell options. When there's low volatility, buy options. Is it correct?
Right. That's essentially the idea.
Why is that?
Well, basically, volatility is a sort of mean reverting thing and goes back to a normal state. So when volatility is low, implied volatility is low, that is, that's the part of an option price that's looking forward, then in general that option is going to increase. You can't be sure on a specific case that will be, but in general that's what's going to happen. So you're better off with buying strategies, so buying options or calendar spreads or things like that. But when the options are very expensive, you need to try to find out why. So if it's just because there's a bear market, then that's one thing. But if there's a takeover or something else happening, or like in the case of biotech stocks, if there's a drug trial results are coming out or an FDA hearing, you don't want to necessarily sell into those. But if it's just generally expensive, like right now in the oil stocks, options are expensive because people are a little bit worried about what might happen but I don't think that's warranted. Oil stocks are huge stocks and they'll revert back to the mean. So selling those options is, hopefully profitable.
Okay. Then how do you use the option data like volume or price to predict the movement of the broad stock market?
Right. Well, we use put-call ratios for option volume. So you take the number of puts that are traded divided by the number of calls that are traded. That's the put-call ratio. So we use that as a contrary indicator. So if too many people are buying puts, if the put-call ratio gets very high and then starts to roll over and go back down, that's a buy signal for whatever you're looking at. So if you're doing that on all stock options, then that would be a buy signal for the general stock market.
Okay. Well, at your speech, you mentioned to use VIX, Volatility Index, to protect your profile.
Right.
How do you do that?
Right. To protect the portfolio. Right. Well, I stay short term, so we only buy 1 month out, and we buy out of the money VIX calls, usually about 7 points out of the money. And so that will not cost you a lot. So if you don't need the insurance, it doesn't cost you a lot. But if anything really bad happens, VIX is going to explode way more than 7 points. And so if you get into a really nasty, like October 2008 or the flash crash or August 2011, any of those kind of things, VIX went from like 12 to 50 in a blink. So if that happens, then those options will work for you and protect your portfolio. But it's sort of like insurance. I mean, you don't necessarily want to cash in on your insurance. You pretty much just not have to. But if you need it, it's there. So I use it as disaster insurance and insuring against a big market crash.
Okay. Well, for beginner option traders, they always having trouble choosing whether in-the-money options or out-of-the-money options. What's your suggestion?
Well, if you're just going to buy an option in the money.
In the money.
Right, because that way, I don't know exactly how good a stock picker the person is we're talking about, but a lot of people can pick stocks halfway decently, but then they mess it up when they try options because they buy out of the money. So if they buy in the money, it's going to behave much more like the stock.
Right. Okay. So what are the best option strategies right now in the current market?
Yeah, well, I mean, the one that I always like is put ratio spreads on the S&P 500. So you buy like an at-the-money put and you sell 2 out-of-the-money puts. That strategy has a theoretical edge. It generates a credit, so if the market goes up, you make the credit. And if it goes down a certain amount, you're going to make money there too. You just have to be careful. If it goes down too far, you have to cover at the lower, the lower break-even point.
Okay. Well, thank you. Thank you very much.
Okay, you're welcome.